Welcome back to the deep dive. Today we are undertaking a pretty urgent mission for you. We're doing a high-speed, high-substance synthesis of recent market movements, specifically for a critical block of 8 U.S. stock tickers: UPST, SOFA, AFRM, LC, PYPL, Hood, and Coin.
Yeah, quite the list. And it covers a lot of the modern fintech and crypto exposure landscape.
Exactly. And they have all been very busy lately. So our source stack is, well, it's hot off the presses. And our goal isn't just to summarize what happened. It's really to help you analyze the source of the current movement. We've got to distinguish clearly between events that broke, say, in the last 24 hours.
Really fresh stuff.
Right, the truly fresh news and those market-defining announcements that happened earlier this week.
Mm-hmm. And that distinction is everything, especially when you're looking at volatility. It really is. What's fascinating here isn't just that these drivers are close together in time. It's how the market reacts differently, right?
Right.
A new earnings report versus maybe an analyst note that came out 48 hours later. They create different kinds of pressure.
Like two different gravity wells, as you put it earlier.
Exactly. So we need to help you categorize this knowledge right away, so you know if you're seeing an initial reaction or maybe more of a continued digestion phase.
Okay, let's unpack this then. Speed and substance. We're going to jump straight to the freshest information, the news that really hit the wires, confirmed within the last 24 hours.
Okay.
And our sources confirmed specific, concrete news for 2 key tickers out of the 8 you asked about. Let's start with Affirm, ticker AFRM.
All right, AFRM.
We saw an immediate response there because they delivered news about expanding their key retail partnership network.
Okay, partnerships. That's always key for them. Was it just a minor thing?
No, it doesn't seem like it. We saw analysis specifically highlighting that AFRM is accelerating its push into, high-ticket durable goods financing.
Bigger items? For the holidays, presumably.
Exactly. Backed by confirmation of successful pilot programs.
Okay, that's a great nugget for you to remember. Because for a BNPL company, a buy now, pay later company like Affirm, expanding into higher average order values, securing holiday partnerships, that's not just good news.
It pushes back against some concerns, right?
Precisely. It's a direct counter-argument to those credit risk concerns that have, plagued the sector. So that fresh information hitting within the last day, it directly addresses a core investor worry. That's immediate impact.
Right. And we see a similar dynamic, that immediate response, with Robinhood, ticker Hood.
Okay, Hood. What's the latest there?
In the last 24 hours, sources detailed a pretty significant update regarding their international expansion efforts. We're talking confirmed regulatory filings, successful initial testing for a new brokerage product launch targeting a major European market.
International expansion. That's critical for Hood strategically. Robinhood's been trying to, diversify its revenue, hasn't it?
Yeah.
Away from just U.S. retail options trading.
Exactly.
So this fresh international move, it suggests a viable path towards, maybe more institutional stability, definitely revenue diversification.
So when you see Hood's price moving today...
Yeah, it's likely reacting to the market pricing and that future growth potential from that confirmed geographical expansion.
Okay, so those two, AFRM and Hood, driven by truly breaking last 24 hours news.
Correct. Concrete, immediate catalysts.
Which makes the movements in the other 6 stocks fundamentally different, potentially.
Mm-hmm. They're reacting to something that happened a bit earlier, which means the volatility might be, slower, more drawn out perhaps.
Okay, so let's pivot now. Let's talk about the critical events that really shaped the start of the week. Maybe not technically breaking news right this second, but absolutely essential context. The events that set the medium-term direction.
Yeah, and this is where it gets really interesting, like you said, because the sheer volume of news in that slightly earlier window, it's kind of stunning. We're talking about a concentration of high-impact events across 6 specific tickers.
6. Right, because we need to include UPST now.
Exactly, in that narrow 36 to 72-hour window. So think last Monday, Tuesday. These events really set the tone for the whole sector's performance expectations, even if they aren't making today's headlines.
Okay, let's bring in Upstart then, UPST. We didn't mention them in the 24-hour group, but they did have high-impact news confirmed in that earlier window, right? Even though it wasn't Q3 earnings for them specifically in that batch.
That's right. UPST, the AI lending platform, they saw a critical reaction based on updated analyst projections. This followed an internal release of updated loan performance data.
Loan performance data, that sounds key for them.
It is. The core insight there was this ongoing debate about their AI model's ability to predict defaults, especially now in this high-rate environment.
So what do the analysts do?
Well, we saw key analysts adjust their forward guidance based on a slight uptick in projected loan loss rates,
Ooh, okay.
which is a major directional indicator for the stock's risk profile, obviously.
And that specific data point, it landed squarely in that 36 to 72-hour window.
Yes, and it's definitely still heavily influencing its current trading sentiment today.
Okay, so that makes 7 stocks accounted for. AFRM, Hood with the fresh news, UPST with critical data slightly earlier. That leaves the remaining 5 tickers. And for them, the high-impact events all fell into 2 main categories.
2 major market-shaping categories, exactly. Either their Q3 earnings announcements or major partnership announcements. The big stuff.
The defining moments.
This cohort, these 5, this is where the substance of the whole sector's health check really lies, I think, if you connect to the bigger picture. Q3 earnings, they give you that hard performance baseline, right? No arguing with the numbers.
And partnerships.
Major partnerships suggest strategic evolution, future growth potential. The fact that this cluster of news, either earnings or partnerships, hit these specific 5 tickers almost simultaneously, that's crucial for understanding the current trends.
Okay, let's break down the substance for those 5 then, starting with Block, formerly Square,
Yep.
ticker SQ.
Right, SQ.
Their movement stemmed from Q3 earnings. And the key nugget there seemed to be a massive divergence between its 2 core segments.
Oh, how so?
Well, the Square seller ecosystem showed some resilience, but the real driver, the thing that got the market excited, was the acceleration in user adoption and engagement within Cash App.
Cash App beating expectations.
Significantly beat analyst expectations, yeah.
Okay, see, that's the critical detail for SIFQ right now. The story isn't just about margin compression, maybe. It's about that user base momentum in their consumer-facing products.
So if you see ISQ moving,
It's likely the market deciding how much that Cash App momentum outweighs, the broader macroeconomic pressures on their merchant business. It's a balancing act.
makes sense. Okay, moving on to SoFi Technologies.
SoFi, right.
They also delivered Q3 earnings during that Monday-Tuesday window, and the major market driver there was tied directly to loan performance.
Always critical for lenders.
Yeah, and remember, going into earnings, investor anxiety was pretty high about loan delinquency rates, especially in their personal and student loan books.
Understandable in this environment. So what did the sources tell us? What was the key takeaway?
Well, it seems their net interest margin, their NIM, held up better than expected.
Okay, that positive.
And while they did see some normalization in delinquency, which, is expected, the market seemed to react positively to their confirmed progress on
transitioning fully to that bank charter model.
Exactly. That's stability. Plus, they gave strong guidance on cross-selling financial products to their members.
Right. So it provided that crucial stress test the whole lending segment needed, really. The focus was on, controlled risk management, not out-of-control losses.
Controlled risk. Got it. Then we have PayPal, PYPL.
PYPL, always under scrutiny.
Their Q3 report came with, a high level of scrutiny, especially regarding their competitive moat against, say, Apple Pay and other payment processors.
So what was the single most important nugget there? What was the market really focused on?
It seemed to be analyzing the success of their proprietary branded checkout buttons versus just their overall payment volume. Is their brand still driving specific choices?
Yes. And the insight connects to operational efficiency, too. PYPL announced some cost-cutting measures. They reaffirmed strong free cash flow guidance.
But
the market reaction was mixed, specifically because of that ongoing pressure on transaction margin.
the profitability per transaction.
Exactly. So the stock's performance after the news reflected this debate. Is high volume enough, or do they absolutely need to halt that margin decline immediately?
That complexity means the market's taking longer to settle on a valuation, perhaps?
I think so.
Yeah.
Still digesting that one.
Okay, that brings us to Lending Club, LC.
Another lender.
Another lender. But their story is, well, it's unique, isn't it? Because of their evolution from just a peer-to-peer platform.
Right. The bank charter acquisition changed things.
And LC's Q3 earnings highlight seemed to be their successful execution of that bank charter strategy. They're now retaining and funding a much larger percentage of loans directly on their own balance sheet.
Which is a major shift in both risk and revenue profile.
So the essential takeaway for LC,
It's that they are no longer purely a facilitator, a marketplace. They are a functioning, regulated bank that allows them much greater control over their funding costs, especially now.
And the Q3 data showed they can actually execute this model shift, even in a tightening rate environment.
That's what the sources indicated, yeah. It's
Yeah.
a fundamentally positive, long-term structural change. And the market is still digesting that days later, too.
Okay. One more in this 36, 72-hour cohort. Coinbase. Koyan.
Oh, Koyan and crypto exposure.
Their market driver was predictably tied to the crypto market's volatility, but the specific nugget from their Q3 report was, maybe surprisingly, the resilience of institutional revenue.
Interesting. So not just retail trading swings.
Yeah, what's fascinating is how that narrative might be shifting for Koyan.
Ugh.
While retail transaction volume is still, highly volatile, the Q3 sources highlighted significant growth in institutional custody and staking services revenue.
Things that provide a more stable, recurring revenue baseline.
Exactly. That's kind of the holy grail for crypto platforms, isn't it? Stability.
So the market's challenge now is,
It's trying to reconcile those volatile transaction fees with this burgeoning, potentially more stable institutional segment. How do you value that mix?
okay, wow. So we've just covered, let me count, AFRM, Hood, EPST, Sequ, Sophii, PYPL, LC, and Corning. That's all 8.
All 8 accounted for, yeah.
And across those 8, we've detailed specific confirmed market-moving events just in the last 3 days.
Yes, and the total picture is, well, it's pretty stunning when you lay it out like that. You have 8 companies, all in overlapping sectors, fintech, lending, crypto, all facing major specific news within a 72-hour window.
Right. Which raises a really important question for you, the listener, the learner. When such a large portion of a sector announces significant forward-looking data like earnings or partnerships almost synchronously, are we really seeing isolated reactions anymore?
That's interesting. But I want to maybe challenge that hypothesis just slightly.
Okay, go ahead.
You mentioned a potential systemic reaction, but we just detailed how different the drivers actually are for each one. For instance, LC is proving its bank model works. Koyan is proving its institutional resilience. AFRM is expanding key retail partnerships. UPST had specific loan data worries.
True, the catalysts are distinct.
So are we really seeing systemic pressure, or are we just seeing, overlapping reporting schedules that happen to reveal highly specific, idiosyncratic risks and successes at the same time?
That's a fair point, a very fair point. Maybe systemic reaction isn't quite right. We're not seeing uniform failure, for example. Perhaps it's better to think of it as systemic stress testing.
Ah, okay. Explain that.
Well, the market is applying the same broad macroeconomic pressure, high interest rates, recession fears, to all 8 simultaneously. And their individual performance details, the ones we just discussed, show who's navigating that environment well and who's maybe struggling more.
So the timing is systemic, but the substance of the reaction is highly specific to each company.
Exactly. The UPST data on loan loss projections is an isolated risk metric for UPST primarily. But its reaction informs the wider lending market sentiment, doesn't it? It affects how people feel about SoFi and LC too, even if their own results were different. There's a ripple effect.
Okay, that makes sense. So bringing it all together, what does this actually mean for you, the person analyzing the price action of these specific stocks right now?
Knowledge application is absolutely key here. Before you even think about analyzing a price swing, you must identify the catalyst based on this breakdown we just did. Ask yourself, what's driving this move right now?
Is it sharp and sudden?
Right. Is it driven by that immediate last 24-hour news we verified for AFRM and Hood? That tends to cause high-frequency, sort of quick, sharp volatility. Or is the movement maybe slower, more persistent, representing the continued digestion of those Q3 earnings and partnership announcements from the earlier 36 to 72-hour window? The news affecting SKU, SoFi, PYPL, LC, Corning, and UPST.
And that distinction informs your strategy, right?
Absolutely. If it's fresh news, maybe the volatility peaks quickly, might be more short-term trader-driven.
And if it's the older news still being digested.
Like the deeper implications of PYPL's margin concerns or SoFi's successful risk management or LC's bank model proof. The movement is likely a slower, maybe more deliberate recalibration by institutional money. Big funds adjusting their positions based on fundamental reassessments.
So understanding the timeline helps you anticipate the type of volatility you're actually facing.
Precisely. It's not just that it moved, but why and when the catalyst hit.
That was an essential, rapid, and I think really substantive deep dive into the very recent history driving these key stocks. Thank you for sharing your sources with us, letting us cut through some of the noise and provide the specific substance behind the timing.
You're welcome. And maybe here's a final provocative thought for you, the listener, to explore on your own. Given that 6 of these companies SoFi, LC, SKU, PYPL, Koyan, and UPST were all simultaneously dealing with the weight of Q3 earnings or critical performance data, and their specific successes and failures inevitably impact perceptions of their competitors.
Okay.
How does the collective risk assessment of that entire fintech lending crypto sector influence how the market prices the fresh news we saw for AFRM and Hood?
So does the sector's overall perceived health based on that cluster of earnings?
Exactly. Does that baseline health dampen or perhaps amplify the immediate reaction to the breaking news for the other two? How interconnected is the sentiment?
Something that I'd definitely mull over as you track these complex overlapping
For
markets.
sure.
Goodbye for now, and keep diving deep into what matters.